High-risk investment. Trading on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from an independent financial advisor if you have any doubts. Market opinions. Any opinions, news, research, analyses, prices, or other information contained on this video is provided as general market commentary and does not constitute investment advice. MasterTheMarkets will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use of or reliance on such information.
Hi traders, welcome to our live trading workshop webinar today. We've got a lot in store for you today. So what are we going to be really covering? So let me just quickly go through that. So we first are going to be looking at some live trading positions and potential trades that are setting up, as we usually do, based on the stretch principle and the momentum trend alignment strategies. Okay. And then the second thing also that we're going to be taking a look at is one topic for today. And the team has prepared one topic which is on advanced chart analysis for exits, basically. And then finally, then we will end off with some questions and Q&A session over here. All right. So quite a lot to cover in about this 30-minute session more. So more or less a little bit, sometimes we run over, but we got a lot in store for you today. Right, let's get on with it. Hi traders, welcome to our live trading workshop webinar session today. Still not on here, founder of MasterTheMarkets Elite Trades Conference and the Traders Open Day. So in terms of the strategy front, what do I have actually seeing at the moment? I'm not actually seeing a lot of clean moves. I did come across silver, which is what I've got at the moment. So what I'm looking at silver at the moment, traders, is that I'll be taking a look for the 15-minute time frame for the silver to confirm its bottom. So that's what I'll be taking a look at in terms of now. So that's one of the highest probability trades I can really see as of now. If it does confirm, let's say maybe around here, but remember when I say confirm, I have to wait, right? I can't enter this on impulse on wherever that it is at the moment. What I mean is that it needs to, when this bar closes at the close of 15 minutes, right, in about 6 minutes time. So what I really need is, I need the arrow to come up, right, and a dot on this bar. If this bar fulfills the formulas for what we have created, according to the smart money indicator that the quant traders gave to us, then we will take a trade on this, okay? Now, what is the trade based on? The trade is based on trend alignments, right? So before I come on to that, then I'll also see where my stop loss would be over here. And then as a small target, what I will do is, let me just change this to red over here. And then as a small target, what I'll do, traders, is from wherever it closes, I will take a 1 ATR number, okay? The 1 ATR number. Now, the 1 ATR number here, if this closes, it is saying is about 0.12. That's about 12 cents. Is it not, traders, right? So 12 cents from here. So I will add 12 cents from wherever I enter. So in this case, if that will be 33.18. So anyway, I'll just keep it just roughly around there. And then we'll see if it closes and if it does confirm. If we do get that, then we will have a trade on this, okay? Now, roughly, why am I looking at this particular trade? As I've mentioned before, what we will usually do on the daily time frame, what I can see over here, this is towards an uptrend over here, right? Some of our live trading room members or paid clients would have taken this trade on the end of day strategy as well on an 80% OE, where we just let it run to the 80% OE target. This is the end of day. This is not intraday, which they would have taken yesterday, which it all got to anyway, to its target. But for today, in terms of trend alignment, I will take a look at this being in the uptrend. So if I take up my trend alignment tables on over here on silver, I'll do this, right? So uptrend phase 1 on the daily time frame, and then over here on the 4-hour as well. I'll take a look at volume very shortly too. So over here, 4-hour, this one is uptrend phase 1 again as well, right? And then after that, then I can see on the 1-hour, if you can see on the 1-hour here, right? Let me just quickly do it here. I think it's more easier, isn't it? So over here, again, on the 1-hour, that's an uptrend phase 1, 2. So strong bullish uptrend and on all time frames. And then on the 15-minute, it's a downtrend phase 2. Okay, but still the trend alignment is the direction alignment, sorry, is there. You can see, right? That's a downtrend phase 2. A bit of a noise over here where it took out that and it's coming back up again, right? So if it takes out this high, then it will turn into an uptrend as well. Then in terms of the stretch principle, the 1-hour stretch, let me take a look over here. It just took out the 1-hour stretch to the downside here, but just a little bit of false breakout, right? And then after that, then it went towards the upside. Okay, so then I would just mention that here. I would say mainly towards the upper, but took out the lower, stretch with false breakout. Okay, so I'll just write that out a little bit so is that for reference, right, later on. And this one here can be on the 180R here, right? Usually we'll take it to the 180R on the 15-minute time frame. And as it done its ATR range for today, so let me quickly just check that on the daily time frame here. I know time is coming up, 2 minutes more for the 15-minute bar to close. Over here on the ATR level here, I can read that is 70 cents, right? On the ATR range here, right? Let me put my cursor on there. You can see it's 70 cents. 0.8 times 70, that's 56 cents. It still hasn't done that. Bar range is 51 cents. That was designed by one of our clients. That was really good. Handy tool to have. So I'll just say no, and then bias is long. Okay, good. So we got everything here. So you can see very quickly that it's all trend aligned, direction alignment on 15-minute, perfect. And then after that, good to go for the trade, and the bar range hasn't been formed as well. So now I quickly will go on to my 15-minute time frame, and then we'll take a look whether this closes or not. Okay, and then we get the dot and the arrows. So we'll wait and see how that comes across. It should come appear anytime soon. There we go. You had that in real time, isn't it? Right? So now what we do, and you can risk manage this accordingly, right? So I'll quickly put this order here. So this is what you will have. So on the close of this, right, so let me move that away. Right, so on the close of this bar, 33.07 is what we got, right? 33.08, right? 33.08. There we go. That's for the stop loss there. That's for the low, 32.85, 32.86, that's fine. And then very quickly, the target would be for 33.08 plus the 12 cents. That would be 33.20. Okay, 33.20, more or less we got that. 33.20, okay? That's what we will have over there. So do your risk management accordingly. You can see there's a bit of retracement there, but that's totally fine. And then after that, you can place your new order over here, and then you can then go across accordingly. Okay, you can then put it as a pending order or whatsoever it may be, and then you just take the numbers across accordingly. Okay, 32.886, right? 32.86 for the stop loss, and then the target 33.20. Okay, but remember that You can put a buy stop at the moment. So that would be, let me just quickly get that, 33.08, isn't it? Right? 33.08. Put some spreads on top at the moment. 0.9, we will just do that. Okay. And there we go. So we got that. If you look at that, that's a little bit of a spread because of the volume spikes at the moment, but that's fine. 33.09 because it's a much more peak time. So there you go. That's your order there. We'll see how this will carry on to be. Let me just quickly then place that. And then we will see how that carries on to be in terms of the trade over here. Okay. Now, that's on silver. That was the highest probability trade that I could see. Now, on the other ones, couldn't really see much, but I know I'm getting a lot of questions asking, what is this strategy based on, for the newbies that coming in? Those of you who've been following us, you understand this. This is based on the momentum-based strategy and a combination of the stretch principle. That's why we got the trend alignment tables here. So basically, traders, for those coming in new, we do two types of strategies here. One is called the stretch principle strategy, right? And then the other strategy, what we call the trend alignment strategy, okay? This is what we usually look for in terms of our trades, okay, in this live trading session. So over here, those of you who want to go and look into that, I'll quickly also, let me see, on silver, I did forgot to look at this, but let me see here. On silver here, I want to just quickly just take a look at the volume, actually 33. Sometimes it just runs, isn't it, on the trading view. The axis isn't usually covered. Okay, so over here on the volume, perfect. This is all aligning. We got a really good textbook one here. We got the green dot here on the VSA light. We got a big, nice volume spike as well coming in on the red bar. And then this one, so far, it's looking to close higher than that. And you know that that volume spike was towards the buying action. Now, in terms of the 15-minute, I'll quickly take a look at the 15-minute over here. You can see that, of course, the confirmation bar came here too. Still volume spikes all supporting that. Big volume spike also happened here. Next bars then close higher. Confirmation dot happening. Perfect scenario here is what we are having at the moment here. Okay. Over here, you didn't have that noise that I had on the other broker data here. Over here. So we will be still, this is showing a strong uptrend towards the upside. So we'll wait and see how that carries on to be and how that performs. Now, those of you asking, okay, how do I understand all these strategies and everything? What you can do is two places you can go to. One is, go to our channel, youtube.com/MasterTheMarkets. Then whenever we go online or whatsoever, what you can do is click on the subscribe button, okay? For some reason, it's locked me out. Just give me one moment. I'll show you what guys got to do. Once you subscribe, you got to hit the all bell icon. Okay, let me just do that very quickly over here. Let me just quickly see if that one works or not. Okay, yeah, I think it is signing me in already immediately. Okay, good. So if you can see over here, so once you hit the subscribe button, then to know whenever we go on live, what you guys got to do is click on the all bell icon. Okay, click on the all bell icon over here. Okay, and then what that will do is that whenever we go live, it will give you a notification to your phone. All right, so that's what it will do, and then you can follow us in real time. Now, in terms of the strategies, understanding the strategies, what you have to do is go on to the stretch principle over here. Now, stretch principle videos over here, then you can understand what this strategy is all about, what we're talking about, because we always talk about the stretch principle concept. And then the other thing you can also definitely take a look at, I highly recommend, is the 7 steps to CTP.com webpage, okay? where once you put your name, email, and then you put your number, click on that, and then you get the 7 free videos all sent to your inbox. Okay, they're about 10-15 minutes each. Highly recommended. Over 15-20 years of collated research passed on to us by institutional quant traders, okay, who trade for like Morgan Stanley and all that. Very lucky to find them. And that's how we got all of these tops and bottoms all quantified over here. Okay, as you can see, all the arrows over here and all of that, all the dots when the confirmation dot happens, how to write the open equity and all of that. Okay, so all that is basically all explained over here on how we do it, the framework. And this is how we got invited to many places like, the Society of Technical Analysis. Then I'm lecturing over there this year as well to their students. And then also the other things also like Ninja Trader, we invited over there 11, 12 times as well. Okay. So all those things because of this videos and the very smart way of systematic quantitative type of thinking. Okay, definitely do that. And the good part about this is you can apply this to anything that you do, any strategies that you do. So that's the good part about it. It's cross transferable. Okay, good. Now saying all of that, so let's now come back into the positions here. Now I did take a look at the other ones just now. But I really couldn't find any other traits over here on both the strategies. You see over here on cable, it's a bit sideways at the moment as of now. Lower stretch taken out, upper stretch, and then it's coming back down again. So that's why I avoided that. Euro dollar, same thing over here as well. It's saying an uptrend, but then lower stretch. Okay, false breakout maybe up stretch, then false, and then coming back here, consolidating. I didn't really get any good signs or clear signals. Again, dollar Swiss doing the same thing as well. And the dollar Swiss on here is downtrend. So they're not aligning. So that's what I was looking for. Gold is another one. It is consolidating quite a bit. Uptrend here. I did take a look at this as also. And on the 4 hour, what are we having? It's still a downtrend. Direction alignment is there, right? And then on a 1 hour, again, it's doing the same things, isn't it, traders, right? So it's coming back down, up, and then came back down again. So this is why I avoided this. And then the best bet that we had was on the silver. I did take a look a little bit on Brent over here in terms of downtrend, but then on the 1 hour, then it's towards the upside. But on the 15-minute though, has the range been formed? Let me quickly take a look at that. Bar range. This one is 173. So what are we taking a look at? 0.8 times 170. If anybody is faster than the calculator, you can type that into the chat box on YouTube. 1.36. So $1.36. So it hasn't done its range yet. It's $1.26, yeah. So over here, what we can do, if you did want to take a look at Brent, I will start to take a look on the 15-minute time frame and wait for a top to confirm and then the bottom, and then we can start to take a look at the 180R level. So we can start to take a look at that. I'll take a look at this in terms of volume also. That has been designed by the Trade Guided team. So let me go by here. Right, so silver still retracing a little bit, pending order still not been hit yet. So wait and see on that one. Let me see. Brent oil. Right. So let's take a look at this one here. Let me take a look at 15 minutes. Right. Potential buying coming, great. Set up here too. You can see that over here, that's also volume spikes over there as well. Okay, so all aligning with the volume. This has been designed by the Trade Guided team, Gavin Holmes and his team. So this is a really good complementary thing, which tells us, it gives us confidence that there is still fuel for this move up. But to give us more confidence, because this has stretched quite a little bit from its bottom here on the swing basis, I will be more comfortable if the top confirms and then another blue dot comes before we start to take a trade towards 180R level, okay? But sometimes some days, it just pushes through. Then you can start to take. Now remember that all we are looking for here is from the US session, isn't it? From 2:30 p.m. UK time, where the US then opens officially in about 4 minutes. But then those of you who already can apply these principles in the early morning, you can see that you could have ridden this a bit more longer. But then, just a word of caution, we can't just look in hindsight here and just say, oh yeah, if I could have taken that. But it must match with your rules. I can easily see that on this basis, I don't think this would have matched for the rules for today, okay? Some days it doesn't set up. Some of the instruments will. That's why I always say sometimes if it's difficult to make money on one instrument, take a look at other ones, right? There will be the money will flow to other instruments. It'll be much more easier on the other side. So based on all of these traders, is what then I saw that silver was the best one that came to actually fitting all the rules. It was a bit more cleaner. Now, most traders always will say, oh, Tiro, look at that. Immediately when the dot came, it went against you and all of that. Please don't just look at this. This is what, normal, natural amateur traders look at that and then they get scared the hell out of it, right? So what you do is, this is expected, isn't it? Now, if you don't expect that, that means what do you expect? That means to be clean run all the time. That's not possible. So this volatility will happen. And this is what we call the technical terms volatility. But, if you want to call it a bit informal, the dance that it does before it gets to its upside. That's what one of our US clients called it, right? And it will keep doing that, right? Because that's how the market moves, right? It doesn't move in a straight line all the time, right? Sometimes it does, but then you see consolidates a little bit, then after that it goes up. So you must account for that. Now, if you're a bit scared of this and all of that, then what you do is, as we did just now, wait for it to retrace a little bit, then put a pending order, okay? Then wait for it to retrace, come back. But sometimes you might not get that and it will go shoot up. So pros and cons to every type of entry. So you got to find your balance, okay? We saw this a little bit on DAX the last time as well. If you all look, we did an aggressive entry and then we did a conservative entry. Remember when we did that with Trade Guider as well on Thursdays, we do that tomorrow. We'll be doing that price and volume webinars together. And we did that. The first position got stopped out, and then the second one then got hit towards target. So a lot of learning here that we do in terms of the live trading examples that we are showing you. Also, I must reiterate that here we just don't give you the fish, right? We're teaching you how to fish as well, okay? So don't just expect us to spoon feed you all the time. Learn these principles and then apply it on your own strategies, okay? That's why I mentioned just now, isn't it? Definitely take a look at the stretch principle videos and also this 7 steps to CTP.com videos as well, okay? They're very, very powerful. All right. Saying all of that, now let's go on today now to the topic, isn't it? We have a topic today to cover. So what is the topic that we will be taking a look at today is the exits, right? We'll be taking a look at exits. Let me just quickly, what I'll do is the old one, isn't it? Let me just put the new Volume Pro one over here. This one should be, I just want the RV one for now. Then I'll put the VSA light as well. Okay, good. So we got that one. Right. Now, what is the topic for today? The topic for today is on exits, right? Advanced chart analysis patterns for exits. Now, exits, we always put a lot of emphasis on exits because we always say that exits is where the money is realized, isn't it, traders, right? Until you exit, the money is not yours. The profit or loss is not yours, right? So even from here, let's say you entered now, let's say you're riding that move, now it comes back, retraces, goes back up. The money is still not yours, even though you might see that unrealized profit. Let's say now you're £1,000 up, but until you exit it, that money is not yours, right? Then this can come down to £500. Until you exit, then it's yours. After that, then it can shoot up to £2,000. Until you exit, the money is not yours. Then the natural question always will be to where should you be exiting? On a place. Now, you can never get the perfect answer. You can never always like keep exiting always at the perfect right top before it turns. Anyway, then the question then comes, what is really a top? What is a quantitative top? What is a bottom? That's what to eliminate that subjectivity, we have quantified what a bottom and a top is over here, right? The bottom is by a blue dot, top is by an orange dot, okay? That's what we have quantified it over here, but that's just a framework. That's not your strategy yet. So the next question then comes is, what is the right exit? Okay, most people always want to exit near to a top. What I would say is, as a starting point, what you should ask yourself is, what is an exit that I will always feel peace at when I come out of the trade? So even after I come out of the trade, let's say I'm on a long trade, I make £2,000, and after I come out, let's say when I have a little bit more, 2,500, before let's say it comes down, I'm still happy, I'm still at peace. Because I know I've done some testing and logically and emotionally, I feel at peace with that exit. But to come to that point is what we have to do the understanding and testing of different exits. Okay. So based on that, what are the different patterns that we can take a look at the exits? I've got listed about 3 to 4 of them. So let me go through them. I was thinking of actually putting some PowerPoint slides on it. Didn't really get the time on that one. So I will just draw it here and I will go through in terms of the charts, okay? So first thing is, you can see some from some professional traders out there, and you can take a look at some of their presentations and read some of the books. Some of the exits that you would see is based on moving averages, like on 50 moving average, okay? So what they would say is, so let's say if I put a 50 moving average over here, let me do that now here. Let me find the moving average. Do I have it in my favorites? I don't have that one there. So let me do it there here. Moving average, right? So let me just get moving average exponential. I just need a simple one, that's fine. And then I'll change this to 50, okay? I'll change this to 50. Length is 50, that's fine. And can I... How do I change the color of this? Let me see. Yeah, there you go. That's the color. Change this to red. Usually 50 is red, isn't it? There we go. So now we got the 50 moving average, right? So one exit that people look at, right, in terms of whichever time frame I might be doing, whether it's 15 minutes or doesn't matter, they might look at a 50 moving average. So over here, you can see that you might enter on a daily time frame, but your exit may be on a smaller time frame, right? So over here, what they would say is, if let's say you're going long, if it goes below the 50 moving average, okay, and closes below, that is could be one exit that they will take a look at. In this example, it also confirmed the top over here according to our smart money indicator, right? So that could be one way of exit. Now, those of you who might have just thought about it just now, what if I wanted to exit on a higher time frame? Maybe I entered it on a 1 hour, but I want to exit it on a daily time frame based on that 50 moving average, okay? Right, so if I want to do that, then some of you might say, oh, Tiru, but that 50 moving average is so far away. What are you saying? Am I going to give back all that profit that I've earned, maybe let's say when I entered here? So what would I do then? I don't feel very comfortable with that, right? I won't feel at peace when I exit it as well. So you must understand. Now, the moving average and on what time frame you're going to choose is based on also how long you want to hold that trade for and how much you want to capture. So if you want to capture a much more bigger move, like throughout all these trends, then that's when you use a bigger moving average on a higher time frame. Okay. Now, if you just want to capture one small swing, then maybe you would then use that same moving average, maybe on a lower time frame. These are things that you need to think about as you construct your rules. Okay. So that is one thing. Now, the other thing also that you can take a look at on that moving average example is you can also look for one bar, right? So not only does it close for below the moving average, another thing that you can also look for is if the bar, the next bar, had closed below this low as well. Okay, this is what we call a primary. Okay, it closed below the low of the previous bar. Um, low, okay, in a long, okay? So that's what we call that. So a sign of weakness towards the downside, which is preparing you to exit, okay? So that's one way. So play around with that and do some testing and all that to get some confidence. Another way that you can also take a look at is in terms of stocks, okay? So some of them, some of the stock traders, you know, want to trade for longer periods. What they also do is they sell into strength. Now, what do I mean by that? Okay, what do I mean by that? Let me just see if I can pull up a stock example. All right, or you can do this on any instrument also. It really doesn't matter. Let me just see if I got some stock example here. Let me see. I should have some. Or it should be in the other ones that I've got. Let me pull up this then. Thing. There we go. So investment portfolio. Let me bring up this one. Let's see on Google over here. Let's say I take up an example on Google. Right. Good. So I've got Google over here. So if I were to drop it down, let's say to the daily time frame, right? Or even I can just show you the example here. So what do I mean by selling into the strength? So over here you can see, right, let's say if you did enter around here, right, and what do I mean by selling into the strength? Now, selling into the strength means that wherever that I bought 176, let's say over here, right, 176.81, whenever it's risen, let's say 20, 30% above its price. So 20% of that would be about 30 to 206, right? So once it gets to about $206 dollars over here, 1/5 of that, isn't it? 20%, right? So actually, it will be a bit lesser than that. Let me just do that. 0.2 times 176, $35.20. So if I did that, $35, that's about 211, let's say, right? Or even 10%. Let's do it simple. So if I did 10% into strength, that's about $17, isn't it, right? So that will come to about 19193, something like that, right? Let's just call it $200. So when it gets to about $200, which is about here, right? 10%, I sell into that strength and come out of it, okay? And even though how much it moves after that, I don't really care about it, right? Because I've done some testing and found that 90% of them get to the 10% strength move, okay? So the testing is important, and this is what we call open equity, which is what we have measured over here, you see? 1.298 TR, 0.7 and all that. For that, you need your tops and bottoms quantified. That's the first step, and that's why it's so important, and that's why a lot of people, you know, really inquisitive about what we have done over here. The framework is very, very powerful. That's why we get invited to many places to come and talk. So that is one thing that you can do, sell into strength, okay? So by looking at the price increase. The other one that you can also do is extension from the moving average. So if I were to do that again, in terms of the moving average, so let me just put the moving average again over here. There, I know we have short past time a little bit, so I will see if I can quicken this a bit. Then over here, and then we can take a look at that. Moving average 50 is what I'm taking a look at. There we go. So if it does extend quite a lot, so how do I mean by extension? Again, you do the same thing, right? If it extends 10% above the moving average price. So when I put my cursor here, I can find out wherever that I entered, right? 173. Now, if it extends 10% above that, right, which would be about 190, so around 190 over here, then I can also look to start to keep coming out of it, okay? Extensions. And then you can do a measurement on that as well. This is a very good systematic quantitative way of finding out what percentage move does it do from the moving average before it drops below, okay? That's a good way of exit that you can then do as well, okay? Right, so that's that one there, extension for moving average. And then You can do another one, which I also heard, which is quite unique actually, very good. You can also cut your position sizes if you're getting quite a few losses. This is part of risk management, so as to keep your monthly drawdowns down and also your confidence up as well. George Soros talks about this as well. Until you get a good setup, then you start to increase your position size once you get a winning trade. Okay, so if you got a peak to value drawdown, then you start to reduce it. If you started at 3% beginning, then start to 2 and then start to 1. Keep at it at small risks until you see one winner coming, maybe the market turning according to your strategy rules. Then you can start to come back to your original position size. Okay, you can play around with that as well by looking at your previous data. That is why in the last video we also talked about, you know, what are the different things that you should be having to get consistent performance, in terms of one being mentioned, which is the trader's journal. So if you go under the lives, you can see that from the past to when to enter and exit a trade, how to trade using a momentum, how to stop over trading. So this is where I mentioned about the trade journals and all that, with a good journal and all of that. That will be very, very helpful. Okay. Good. So I think as a summary, what have I covered actually right now? So let's take a look over here. So I covered 4 types of exits that you can start to take a look at. Okay. So one is exit based on 50 moving average. Okay. Right. And a primary, a bar closing below the previous bar's low on a long position. Yeah. The second thing is the vice versa for short. Another one is sell into strength. Okay. Whenever you got a 20% above the price that you bought or 10% above the price that you bought, then you can start to come out of it too. The other thing that you can also take a look at is moving average extensions, and then also risk management by cutting your position size. The last one, which we always do, which we have popularized, is the open equity, which you can apply to all of this also, which is what we are measuring for each swing move. You see on this swing move, how much this is, and this swing move, how much this is, right? And this one here, you see, it doesn't really move much because it was in a counter trend and an uptrend and quickly moved up. The uptrend is very strong. Now, open equity tables, how will they look like? I will just show you this very quickly. I'm not going to go through much in detail because we cover this on 7 steps to ctp.com. But you can see over here that it will be in a table like that. Even when you do your moving average extensions, you can do this also. The probability of it moving 25 is about 85% of the time. You know, 1 to 550, and then 20% of the time 300. This will manage your expectations, and most importantly, when you exit the trade, you can be at peace. Okay, because you are trading now based on probabilities, on good statistical validation. That's how you want to be trading. Okay, good. So I guess that's a lot covered now. I know I did get some questions on. Okay, Tiru, yes, I'm see. Do you also have the same thing on the volatility, where to place the stop? Yes, in a nutshell, to answer your question, we do have that. If I change this to MAE, and if I put less than or equal to, I can quickly see now, based on this, on the GPUSD chart on daily time frame, if I place my stop loss 200 pips away from the entry on the close, usually we enter on the close of the confirmation bar, the bar of the dot, 98% of the time, I won't get stopped out on my stop loss, right? So that's very powerful statistical conviction that you can have as you trade this, right? So this is very important. Not only do we have it in raw distance, we also have it in ATR numbers also, okay? Now, to fully understand this, now that's what I'm telling you, this methodology can be cross-transferable, is very powerful, and this is the one that the quant traders taught to us, which they actually developed back in the 1960s and 70s. So I would highly recommend you guys watching 7 steps to ctp.com, and once you put all your name and details in, and hit the green button, then you can go on to watch the videos. But highly recommend it, because then you can go on to apply to any other strategy as well. Okay, I guess that's that one there. Let's see how silver is doing. Did it come back up? No, it's gone down a little bit more here. Still hasn't hit our pending order because we waited for it to go down a little bit before it comes back to there. It hasn't come back there yet, but a bit of patience, as I said, the volatility, right? So we got to have a bit of patience on that. Let me take a look over here. Brent did go towards the upside. as we were talking on there, yeah, that didn't confirm the top, isn't it? It just pushed up. That you do get that sometimes. In terms of silver, let me take a look. Um, yes, so this top hasn't confirmed yet. So we'll wait and see if it comes and fills us on our entry here again. I still believe there is some strength there, so you can wait and see. 33.09, wasn't it, is where we had it, and 33.087 to be exact. We'll wait and see how that comes along. Our stop, initial stop, can be adjusted towards here if we do get a trigger towards there. But those of you who did enter on that, still not stopped out, the stop loss is still here. Wait for this dance to finish, a bit of a patience game over here on the silver, and the target remains intact at 33.20, which will then turn this into a uptrend also. From there, if you want to put a larger target, you can take a look at that as well. So we'll monitor this. We'll keep updated on the email as well on how this moves forward. Okay. Right, okay, so we'll wait and see how that carries on. I guess that's pretty much that on this session here. We've taken a look at the live trades that are setting up potential trades. We also then take a look at also the topic on exits, where we went through about 5 different types of exits that you can start to consider to put into your strategy. And then we answered some questions as well on the volatility. That's all the time I've got for today. As I said, those of you who want to go through all the topics and the videos here, the boys have done an amazing job over here. Please go on to youtube.com/masterthemarkets and also check out 7stepstoctp.com as well. Traders, that's all I have for now. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.